Hi, my name is Mary. Welcome to my channel. This is sort of a catch-all channel for all of the useful information I wish someone had told me. In regards to a credit score, essentially I avoided this topic and I knew it was like sort of a good thing, but I put it off all throughout college. And by the time I was a senior, I was like, I have great grades, I went to a great school, and I actually have like a lot of investments and stuff. Like, surely you will approve me for a credit card. I was very incorrect. I applied for my first credit card, got rejected, and since then I've sort of figured out how to navigate the whole process, and so that's what I'm explaining in this video here. So why does having a credit score or having credit matter at all? Some people will tell you that all credit is really bad because then people get into debt. If you get into debt, that is really bad, but if you're responsible, credit and credit score is so powerful and it is so important. As a student, it may not seem like you run into it a lot in your day-to-day life, but you will run into it a lot as an adult in many ways. So for example, if you want to apply for credit cards, you need a good credit score or you need a credit score. If you want to apply to live somewhere, like in an apartment, and you want to get a rental lease, if you want car insurance, if you want a car loan, if you want a mortgage, like all of these things will check your credit score. And a couple other like points on why it's important. The first is you can do the math out online. I'm not going to do it for you, but for really big numbers, like for mortgages, even a small change in the interest rate, which is how much you pay for that loan, makes a big difference in how much you're paying overall. And if you have a better credit score, then that means you will have a lower interest rate and you will save yourself like tens of thousands, hundreds of thousands, you will save yourself a lot of money. But you're probably not even in that situation. If you don't have a credit score at all, like I did not when I was an international student, then you literally can't get anything. Like you can't get a credit card because you won't pass their application. Okay, so how do you actually build credit as an international student? I would say the first and most common way is through getting a credit card. So for example, you open a bank account and then you apply and hopefully get a credit card. Now wait, you might be wondering, I need a credit score to get a credit card and I'm getting a credit card so that I can build my credit. Like, how does that make any sense? It doesn't, and the way to get around this problem is, I would say, two ways. So the first is if you have family in the US who is willing to have you as an authorized user on their card, then you can start building credit right away. That wasn't the case for me. That's probably not the case for most people. So the second way, which is the more common one, is you find a bank that specializes or has a specialty in doing student cards. So for example, Discover or Capital One, I believe, have student cards. I went with Bank of America, which they don't have a student program in particular, but they know how to give credit towards people who have no credit history. As a result of going this route, you're probably going to get either A, very low credit line, or B, a secured credit card. A secured credit card means that your credit line will only be as big as how much money you have at that bank, with the bank. So for example, to get a $300 credit line, you'd have to have $300 with the bank. So yeah, that's probably the most common way going the credit card route. Another route that you can take is if your name is on a lease and you're paying rent. So for example, maybe in the summer, you're living off campus, your name is also on the lease, you are paying rent, you are paying utilities. They report that to the credit agencies, so that is another way that you can start building credit. And the third and final way, I don't know if I should recommend this because I've actually never tried this myself, but I know there are credit builders. I would just Google that. And essentially what they are is you pay them a very small amount, like $10 a month. They loan you like $10 a month. You pay it off every single month, and that's the way that you start building credit. So that might be an option. So yeah, those are the three ways in which you can get a credit score having no credit history. And then next we're gonna go through how you actually increase your credit score. Okay, so fourth, now we're going to talk about how you can actually increase your credit score once you have one. So the benefit of being young in terms of personal finance stuff is that time is in your favor. With time and with paying off your bills in full every single month, that is going to be the number one thing that improves your credit score over time. Also, just by virtue of having credit and them collecting data on you over months and then years, that is going to improve your credit score as well. Also with time, there's a good chance you're going to get better mix of credit. So for example, you might start with credit cards, and then you might have your name on a lease, and then you might get a car loan or things like that, and having that different mix of credit will improve your credit score. And then my final tip, which is actually the most proactive one beyond paying off your bills and stuff, is that every 6 months to a year-ish, you should ask for an increase in your credit limit on your existing, credit lines or credit cards, or you should apply for new ones. That is a whole different topic on like which credit card to apply to and how you do the rewards and stuff like that. But the reason why that's important is because it decreases your credit utilization, which is how much credit you're using compared or over how much credit you have access to. By decreasing that, you'll increase your score, and all of this happens just with time. Okay, so now let's actually deep dive into like what composes your credit score, therefore how do you make it better. I think actually one of the best things to visualize this is if you create an account with Mint. Mint is a free budgeting tool that has an app as well as a desktop version. What you should do is you should actually like enable the credit score feature, and then if you use the desktop version, it explains not only what your credit score is, but also what the components are specific to you. Anyway, so how they actually calculate your credit score is fairly complicated, but according to FICO or the internet, the way that it breaks down is about 35% is your payment history, about 30% is, I'm looking here because that's where I kept my notes, about 30% is your credit utilization, about 15% is your credit history length, about 10% is your credit mix, and about 10% is your new credit. So I'm going to explain each of those terms going from what I think is like most complicated to least complicated or most useful to explain. So in terms of credit history, don't be like me and think like, I'm a great stand-up citizen or something, like I should probably be able to have a credit card, because they don't care and they don't look into that stuff. Credit history is something that you just have to start having credit and then wait on for a very long time. In fact, to get some of the best scores, which is over 800, those people on average have had to wait 7+ years, or they've had 7+ years of credit history in order to get to that score. So that is why if you are an international student, if you can be a freshman, get credit as early as you can, and then just wait, you will already have 4 years of credit history by the time you graduate, instead of being a silly Billy like myself. Credit mix just means having different types of credit helps your score. So not just having credit cards, for example, but also having maybe a student loan or a personal loan, or a rental history or utilities bill, stuff like that. Having a better mix slightly improves your credit score. In terms of payment history, this is just about, do you pay your bills on time? I think the best way to make sure you do this is set up autopay, which means set up autopay with your credit cards such that every single month you pay the full balance on time. You just set it, you forget it, and you will never not pay a bill. I'm actually going to make a video, I think, on explaining different parts of a credit card statement, because it's actually incredibly complicated, like weirdly complicated, but that is for another video. In terms of credit utilization, this is just how much credit you currently have extended, so how much you're currently using, divided by how much credit you have access to. So for example, if you have a $1,000 credit card limit and you've spent $100, then your credit utilization is currently at 10%. Now, they generally suggest that you keep your credit card utilization or credit utilization below 30%. And something to note is that these agencies actually randomly throughout a month check your account. What I mean by that is they don't actually do it on the same day every month. And so if you're bumping up towards like a higher credit utilization, I personally just pay off that bill, even if it's not, auto pay, or even if it's not the end of the month, because I know the credit card agencies are checking and I don't know what day they check. And finally, this last piece is called new credit. So what happens is when you apply formally for new credit, they do what is called a hard credit pull. This is as opposed to a soft credit pull. A soft credit pull is when they check your credit score, but they don't report this to the agencies. A hard credit pull is when they check your credit score and it gets reported to the agencies and it becomes part of your credit report. This will ding your score by a few to like a handful of points for a little bit of time. The reason for this is, like, if you think about it from their perspective, if you're like applying for one credit card and then applying for another credit card really soon, like within 6 months or something like that, they think that you might be getting desperate and why do you need so much credit? And so that's why it lowers your score. But this heals over time. So that was an overview of how international students can start building credit. The TLDR is that you want to start as early as you can and be responsible so that time can be in your favor. I wish when I was a freshman, I saw this video, I followed the steps, because your future self will thank you for this in the future. If you liked this video, please comment. Oh my God, what is it? Please like, subscribe, and comment below any tips you have, any other questions you have, any clarification, or other topics you'd like me to cover. That'd be great. See you in my next video next week.